Welcome back to the channel, everybody. This is Morpheus Trade the Matrix, and this is Liquid Sundays Memorial Day edition, Monday, May 25th. Happy Memorial Day. Just a quick reminder, this is not financial advice, and I am not a financial advisor, so please do your own research. With that being said, let's jump right into today's video. Stock market week in review, week ending May 22nd, 2026. Major indices, S&P closed at 7473.47, about 0.9% up on the week. Eighth straight gain, longest since 2023. Dow hit record 50,579.70, up about 2% on the week. And the NASDAQ about 29,558, up about 0.5% on the week. Russell 2000 outperformed. Key drivers, strong Q1 earnings, robust earnings per share growth, AI focus, dip buying, and sector rotation. Mixed amid higher yields and oil. Sectors, energy, led on elevated oil, Middle East tensions, defensives are resilient, tech and AI supportive, but rotated. Weekend developments, Memorial Day, markets are closed today, obviously, but futures are open and up sharply, about 1% right now at a quick glance. Geopolitics, Trump signaled U.S. Iran ceasefire largely negotiated, possible 60-day extension, Hormuz reopening. Uncertainty lingers, obviously, oil volatile, but potential relief. Sentiment is constructive on earnings, AI momentum. So for the week ahead, it is a short week, obviously, starting on Tuesday, tomorrow. Key data, we have consumer confidence. On Thursday, we have Q1 GDP revisions, April core PCE, key inflation gauge, obviously. We have jobless claims, durable goods. So the focus is going to be on inflation versus rate cut odds. Earnings, we have Salesforce, Dell, Costco, and others. Watch AI demand, CapEx, and consumer strength. Outlook is cautiously bullish. Earnings strength, possible de escalation. Obviously, risks include high inflation, oil swings, and high valuation, and thin liquidity. Favor selective dips in quality names. All right, so we'll just clean up the chart here real quick. I do have a SPX cash session monthly chart here. You can see we still have higher lows, higher highs, higher lows, higher highs. If we take a quick look at our EMAs, we are well above our 20-day, our 50, and our 200. If we zoom in on the weekly, same case here. We're still stacked. You can see here that we took a little pit stop here on the 50, slightly below on the weekly chart, and pushed back up. So still well above. EMA stacked on the weekly, and on the daily, also bullish stacked 250, 20. All systems are still a go as far as the EMAs are concerned. Let's take a look at the weekly candle, as we often do, and we'll snap some fibs and we'll get some ideas for levels to look into for this week here. So here is the weekly candle. We closed below the previous week, and slightly, obviously, this is still a weekly close at all-time highs. So bullish, obviously. But let's just take our fib tool from the previous week here and just get some quick levels of reference heading into this week here. So high of the week was on the cash session was 75.06, and the low was 73.33. just do this so we have levels on both sides. Okay. So above 75.05, obviously we look to the left here, and this is our first area of resistance. We're above that currently in the futures market. We can take a look at that once we look at ES. But the extension on the weekly candle is 7611.76. So if we're trading above 74.20, we're going to look to be um, using 75.05 as our resistance, clear that, and we're going to look to see above 75.05 to start acting as support. Let's take a closer look on the daily. You can see Friday we had a little bit of an inverted hammer here, but still closed above the low of the high period. So 74.84 on the daily candle is going to be around our 50% mark. And again, same resistance here. Breakout above 75, above 75.05, 75.32 is going to be our first area of interest to the upside. And, we'll see if that acts as resistance before the open tomorrow. I'm possibly anticipating, a range of between 75.05 and 75.32 as a possibility. Should we break down those levels there, we'll look to 50% of the candle, 74.84. And then if that should break down, I'll look for 74.62. Should that level break down, first thing I do is look to the left, and then I look to the extension. So, basically, the close from Thursday was around 74.46, a significant level, and then 74.36 would be the extension to the downside on the daily time frame. Okay. So, that out of the way. Let's take a look at the ES. Just give you an idea of where we are right now in respect to what we just went over on the SPX. Actually, I'll tell you what. Let's look at the actual SPX electronic trading session. We can tell you exactly where we are. All right. So we gave you the key levels for the breakout. So currently we are trading at 75.41. So we're slightly above. Let's look at a 15-minute chart real quick here. So just for some context right now, we're slightly above the extension that we were talking about on the SPX daily breakout, right? Let's take a look again here. All right, I said basically above 75. We said 05. We were going to look to 75.31. So you can see we are now basically gapped up and we are above that level there. So that level of resistance is actually right here right now. It's the London support here from the overnight session. So above this level here, obviously, this was, anticipated to be a resistance level here. And now it's acting as support. So if I was trading this session today, I would have definitely used probably just the London session high and low here. So these would have been, you know, just some tight levels from today. Just a quick look. Not, there's thin liquidity obviously right now. Futures, Asian, London, and obviously it's a holiday. There's not a lot of volume today, so not really worth trading in my opinion. But if you were going to trade it, this is how I would trade it. But it's a pretty tight range here, 75.31 to 75.48 is a pretty tight range. So not a whole lot of room for um, stops and whatnot. But yeah, if you were going to trade this, if this breaks down the 75.31 level here, you can look to 75.20 and then 75.03. That's around that 75.05 level. That's resistance. That was resistance on Friday. So we'll keep an eye on this. Not sure if we're going to push up too much higher before the open. If I was to guess, I would think this would likely trade back into some support areas here and maybe fill some of the gap here. We'll see what happens. The open is a long ways away. So those are basically key levels to watch on the SPX. I wanted to go over just ES for my futures people here. We'll get back to our weekly candle again. So for futures, this is last week's candle. This is this week's candle. Hold on one second here. Here's last week's candle. All right, so above um, above 75.23, we're looking at 76.27 on the ES. This is weekly, remember. Midway point 74.39 and support 73.54.75. Take a look at the daily. Here is Friday's candle here. Here to here. Too many. Oh, one second here. Let's make this a little bit bigger. All right. Friday's candle here. And you can see here. So, had we traded this, breakout here above 75.23, you can see we came and tapped the extension here, 75.58, and we're right around there. So, would anticipate this to act as some resistance, push it back down, at least retest the breakout level of 75.23. So those are our ES levels here. Daily, obviously, 50% of Friday's candles around 74.95. Support is 74.67.25. If we break down the pivot and support, you can look to 74.31.75 on the downside. And then you got some more targets down here. Should we break down? Obviously, we got swing lows here at 73.50. All right, so that's the ES. Take a look at the SPY. 5 SPY levels. So if SPY was open right now, we would be around 70, 751, 72 level. That'll be key resistance if we're trading above 70, 748.96, below 74, 748.96, 74, 746.72, and then 744.49. Break down below 74.49, and we can look at 741.79. All right, so that's the SPY. We had some interest in the NQ. Let's take a look at our NQ weekly candle here. Oh, I'm sorry, this is actually start of this week here. Here is our previous week's candle here. All right, so the weekly expansion is around 30,000. Obviously, 30,000 is going to be a key psychological level. 30,394 is the extension on NQ to the upside. And if we take a look at the daily, we've already hit the extension on the daily, right? There you go. Okay. So support at 29,435.25. Pivot is 29,591.90. I'm sorry, 591.50, and resistance 29,747. Obviously, you can see we broke above the daily candle, and the expansion here is to 29,941. That's the extension. We tapped out around, we almost hit 30,000. We hit, let's see, 29,995. So I'm going to look for potentially this area here if we trade back into this for tomorrow. And then obviously if we break down previous resistance as support, 29,591, and then support below there, extension below 29,243, and then we have the swing lows here at 29,112. So those are our levels on the SPX, ES, SPY, and NQ. Some notable other factors. The VIX is at 16.5 right now. It's really, there's not a lot of fear in the market right now. So we'll keep an eye on that, obviously. But, VIX below 18, usually pretty nice for swings. Anything under 18, I'm okay swinging stuff. Once we start getting back above that, not as comfortable. Would rather stick to day trading. Put to call ratio, we did have a huge spike on puts, but we are still below our key level as far as too many bulls in the market, not enough bears. So that's something to be cautious. That's why we're bullishly cautious. Also, the other thing that we kind of have to be aware of is we do have some MACD. We have MACD sell signals on. If we look on the daily chart for the SPX here down below, so we did get a bearish MACD cross here. We did have, obviously on a daily, a little bit of an oversold condition on the RSI. But this is something we want to pay attention to. This is something that Stock Traders Almanac highlights. You want to look for the MACD sell signal in late May, early June. So we have that on the SPX, and we have that here on NQ. So just something to be mindful of. Just some my own personal thoughts and some stuff that I've been reading and following. We do have a new Fed chair. Historically, there is some um, some I'll say pullback, some testing of the new Fed chair, and that usually causes some uncertainty in the market. So we're certainly still very bullish, but the market has some clear signals that there may be a pullback. So, yeah, with that being said, thanks for hanging out today. Thanks for checking out the video. Give it a thumbs up if you like it. Drop a comment below. I'll see you in the next one.